All right, I'm live. I just did the first 100 words. So now I'm going to do the next 900 on this live stream. I think it'll probably take me about an hour to do. And the reason I'm doing this is because I violated my rules today. I know that I'm at the stage of being a trader of a day trader where it's all up to me. Like I am the one who will make or break my success. It's not a problem with my plan. It's a problem with what I'm able to do. So I am going to write this word a bunch, old school discipline style, to just ingrain some better habits. That's the idea. And hopefully, too, some people will join and I'll be able to answer some questions. So, without further ado, let's go. We'll start writing the word execute 1,000 times. Whew. Well, let me know if you have any questions. You can just put it in the chat. I am writing the word execute 1,000 times. So I'm almost done with this page, but I'm going to add it up and see where I am at. Okay, 2 pages down. All right, I just finished the second page, so I'm at 175 now. How many more pages? So 175 times. Right now, yeah, so 175 times 3. If you have any questions, let me know. Oh, heck yeah, we got Russell in the chat. First live stream. Russell, this is inspired by you, man. So yeah, I made a thank you for the like. I was doing good today, and then I just traded inside the prior day range when I shouldn't have, because it was obviously just going to be a range day. So I think I just wasn't in a good mindset. I was like trading off emotions. I should have just went on a walk or called a friend, or I don't know, anything to distract myself. Play video games, play some Rocket League. But I just didn't. I wasn't able to follow my plan properly. So that's why I'm like kind of doing this. Oh, you saw. Okay, I'm gonna answer your comment. Saw and don't feel the need to come back to the screen. Yeah. Yeah. I mean, I literally, so I messaged you and I messaged another chat at like 11 a.m. Mountain Time. So like 3 hours left in the market. That I was going to be done for the day. And I was planning on being done. And then I checked my phone 2 hours and 15 minutes later, or like 2 hours later. And I see like a setup forming. I mean, it wasn't a real setup, but I mean, let me just share I can share my screen and show. Well, I can just describe it too, but let me see. Look at what bar. Gotta log into my broker. Okay, let's go through it. Sweet. I mean, should I end this live stream and we can hop on a call? Should I live stream it? I mean, just message me on Discord too, if you want. Up to you. Yeah, I'll just call you. Will this live be saved to your channel? So it can be. I can private it too. But yeah, I mean it's up to you. I say save it for record keeping. Okay, yeah, I'll save it. I'll keep this live up for record keeping. I mean, that's what I'm gonna do. I'm gonna document everything basically. So even when I embarrassingly have to relearn the same lesson many times. So when you say save it for record keeping, do you mean, yo, I got another person in the chat? Knives, what's up? Knives, do you have any questions? Appreciate the comments you've been leaving on my channel. It's helpful. Just talking with my good friend Russell here in the chat, Risk Factor Trading. Thank you. Yeah, I will keep grinding. That's why I'm doing this old school punishment right here. I've got 2 pages down. And so next time I feel like trading in a range, trading in a prior day range, I'll just remember this exercise and I'll say, I don't want to do that again. And I'll be able to avoid it, hopefully. This isn't like, this is my first time live streaming, so I just thought it'd be fun to, I was going to do this anyway. I figured, what the heck, I can ask some questions. Russell, I see you messaged me on Discord. I'm going to look at that right now. And then Knives, I don't know if you have Discord, but I'll throw my Discord in the chat. PM. That's my Discord. So yeah, you've been leaving some great comments. So yeah, you're right, Russell. So what was just shared with me. Hold on. And yeah, so he drew those ranges in, and that's what I should have done today. And just said, hey, I'm not gonna trade in here. So you won't know it's a range till after a few losses. I guess I'll push back on that a little. Like, I did know, my rule is like, if it's inside the prior day range, I won't trade it unless it's at key levels. So like I objectively knew that, but then I had its initial big push up this morning, and then it came down, and then I was like, I was up at that point a little bit, and then I'm just gonna walk away. I did walk away. I came back 2 hours later because I thought it was gonna escape the range. The EMAs had. I only take longs if the 9 EMA is above the 21 EMA, and the 9 had gone below the 21. Let me just share my screen actually, because I can just describe this a lot easier. Okay, so yeah, this should be sharing now. Okay, cool. So I think I had stopped trading. I took this trade down, this push down trade, and I won. And I'd said, okay, I'm just gonna be done. This just doesn't feel right. I'm inside the prior day range. Just not a good day to trade. And then I come back. I leave for a couple hours, and I come back, and I believe we were on. Let me go to the ES. We were right in here. And the EMAs had crossed back to the long side, to the bullish side. And I thought, all right, we pushed up the start of the day, that we have this flag action, and we're going to push up and make another measured move up. That was my irrationalization, because I really should have only, after it makes its initial push up and comes back, I can look over at the daily chart and say, okay, this is probably just going to be an inside bar day, especially with earnings coming up later this week. Just It just makes more sense. Okay, I'm just looking at the chat. So looks like Russell just replied to you, Knives. The 15-minute pullback to the 21 EMA very well could have trended higher. Ooh, I don't have the 20 EMA on my 15-minute right now. But I'll take, I'm guessing that was like right there. I can throw that on real quick. Okay. I'm going to finish reading your comment, though, Russell. The 15-minute could have pulled back to the 20. Very well could have trended higher. But then after the failure, you can see a range develop, especially with daily context. Yeah, the daily context for me is the big thing. Like, if it's not going to... Okay, so first off, the hourly, we're in a downtrend. So, wait, what the hell? Oh, so this isn't, sorry, my trade of it isn't loaded, hasn't loaded the recent days. That's weird. It's only loading up to 11:14. Oh, there we go. Now it's uploaded up to 11:18. Yeah, so after we push up off the hourly, and then we get this candle, this rejection, it's just, I don't know. I don't like using the word like feel because it's not like objective, like data based. But after that rejection, it just like in this really harsh push down, strong push down, and then you see this, it just pause here and consolidate. At this point, I should just draw a shape and say, okay, I'm not going to trade inside this because it's going to be a range. And then in the other rule, this is why I have the rule I don't trade unless it's I don't trade inside the prior day range unless it's at a key level. So this was the prior day range on ES. And yesterday it pushed down and then it came back up and it closed right here on this dotted line. So today I opened my charts. I see that we haven't gapped. I see that we're still in an uptrend because the 9 is above the 21. So I think, okay, I'm only allowed to go for longs. And I don't take any trades. I took a couple of guest trades down here that got stopped, but then bar 6 happened, and like, okay, we're getting long. And I took trades on MNQ, not ES. I wish I traded ES because it's a really good signal bar. And yeah, I just missed out on a lot of this big move up, and I made money. You know, I captured from 520 up to 585, and I captured again like up to 600. So I captured like between a third and a half of this, which is solid, but I just shouldn't have traded inside this at all. Part of the top. The hourly pullback was complete. If we get a break to the upside, that's a fresh move that could be traded tomorrow. Yeah, I totally agree. Coming out of these consolidation days, I think that's when we get good moves. Trade of 8 actually doesn't allow me to show the weekly candle. I wish I could pull the weekly candle up right now, but it's good to be mindful of the weekly chart too. Why shouldn't you have traded it though? Look at the hourly and daily ATR. Why shouldn't I have traded a what? Oh, why shouldn't I have traded the inside? over here? That's a good question. Yeah, so look at the hourly and daily ATR. Daily ATR. Okay, so the average daily range for the last 20 days is 59. And I'm going to turn the ATR down to 1. So it was less than the average. It was only 42. But if we look at the 5-minute ATR, you can see when it was volatile, it was up here. We're getting like 30 points per bar. And then we pushed down to like 20 points per bar. And that's just pretty weak. And then it really got low, down to like 15 points per bar. So when volatility is that low, that's usually an indicator that it's not a good time to be trading. And then the hourly, if I had to guess, I would just say all these wicks, like wick to the upside, wick to the downside, wick to the downside. It's just that's like an indication of it being choppy. I mean, when I saw these 2 wicks here, though, I thought that was an indication of bullish, but I should know better than that. And if I just respected my rule of not trading inside the prior day unless it's at key levels, then I wouldn't have traded it anyway. Okay, hourly had a downtrend on Friday, no bounce and extended, so shorts are a bad idea. And a bounce is reasonable to pull back some. But after the bounce was put in, it's not a good idea to take. Okay, I'm just gonna read that a couple more times to fully digest it. So the hourly had a downtrend day on Friday. Well, let me adjust this so I can see it while I look at your comments. Hourly had a downtrend day on Friday, no bounce and extended. When you say no bounce, I guess I'm confused what you mean. So shorts are a bad idea. And a bounce is reasonable. So you just mean like a bounce move up, like kind of what happened today, for the first 2 hours? Yes. Okay. So bounce is reasonable to pull back some. Yeah, that's a good point. Like because it did have a downtrend day, so it would correct a little bit. Maybe shorts would take profit. Maybe bulls would see an opportunity. Whatever reason, it just makes sense that price action would correct a bit. Yeah. And I mean, just going off my plan, we were 9 was above the 21, and we consolidated, and we had a great signal bar, and so just even I wasn't really thinking about a bounce action this morning. I was just thinking, okay, I should be long because that's what my plan says to do. Hey. All right. I'll mute myself 1 sec. Thanks. To Knives' point, I guess I got to back up more because I was muted the whole time. Do you want me to just call you on here? Sure. Okay, hold on. Gotta get this on speaker. There we go. All right. You're on the air, dude.
Oh, cool.
Yeah.
Well, I gotta mute the video. This delay's about to go crazy.
Yeah. You're the only viewer in here anyway, so this is basically like a private conversation that I can just go back and watch.
Right.
Oh, except maybe should I switch the call to? I don't want to like accidentally share like anyone's like name on Discord. Oh wait, it doesn't look like it would.
Do whatever's best. I don't mind anything.
Okay, I'll just record this, I guess, on the YouTube live. So I'll hold on. All right, I'm gonna end the call, then rejoin.
Okay.
All right, I'm gonna share my Discord now. Share entire screen. Share. Oh. All right, now I'm gonna answer. I'm gonna join this. All right.
Alright, ready?
I'm ready. Wait.
So.
Are you getting lag or feedback?
Oh, no.
Okay, cool.
Okay, so one thing you should probably do as well on your 5-minute charts or 15-minute charts is zoom out to at least the previous day's action as well. Because if you're just seeing like this, you're kind of trading in a vacuum, only looking at 1 day's worth of action, or even like the first 30 minutes worth of action with some input from the previous days from the EMAs.
Yeah.
But then when you really zoom out, you see like, hey, yeah, this downtrend moved you to downside. Just speaking hindsight here, but a bounce is kind of reasonable to kind of retrace a little bit. Just the way price action moves, right?
Yeah. Yeah, 100%.
So having that in mind, it can, help you make better informed decisions. Then you can also realize, like, hey, we completed the pullback. Can we keep going higher, given the context of the hourly downtrend?
Well, I guess it kind of conflicts with the daily uptrend.
Right.
Because that is
and also, you have the context of it being an inside day, coming from the low end, not really low, but low end of bottom 50%.
Yeah.
So it's hard to expect this kind of day opening here, going higher, than going even higher.
Yeah.
It being like an outside day where, let's say, it gaps up to here. gaps up to like around here, then you can push up from there, break the highs, and have like the green bar form up here versus this inside kind of action. Like same thing over here. Right.
Yeah. I know on those trend days it will very rarely break like the opposite way.
Right. So you can, after like a green bar with some kind of ATR is put in, maybe like 67% of the daily ATR, you can kind of safely assume that might be the end of the day. Going back over here, big red day, get an inside bar. You can't expect this to go from here all the way back up, make new highs. Whereas on a day like this, you can kind of expect that because we have the inside bar already.
Yeah.
We're not making a full or like a decent size of the ATR. And you still have more ATR to push out.
Yeah.
So it's kind of like not trading too far from the opening price.
Yeah. Like it put in its move in the first 2 hours, and then it's unlikely that it's gonna really extend too much further.
Right. So it's like managing your expectations, but also like making sure it makes sense in your plan. Because given your plan, like you keep going along when the non-EMA is above 20 or 21, you're forgetting that the move's already been put in, and now you're trading in a dangerous territory, trading much higher versus on the low end near the opening price, right?
Yeah, there's much less expected value trading up there.
Right. One might even be able to say like, hey, after this move's put in, you can look for a short somewhere, although it doesn't really work out. Instead, it consolidates the rest of the day. Like down here, kind of reasonable for longs. Get this U, cup shape. Oh, the cup's completed. What happens next? Find out tomorrow.
Yeah.
So, good plan, but then again, like location, right?
Yeah. And yeah, that violated my one rule of like no trading inside the prior day bar unless it's at the key levels. So if I just would have respected that, it would have kept me out of trouble. And I was thinking like, I don't know. I shouldn't have traded like after when I said I was done for the day, I should have just been done for the day. But then I came back and I got fooled by the price. And I know ranges will always try to fool you that it is going to break out, but they'll often not actually break out. That's like what's tricky about ranges and chop, and that's why I just need to draw the like the zone in that I'm not going to trade.
Right.
Like I'm back at my chart now. So we had our bounce up, then we had a very aggressive, sell point, and I was kind of thinking at this point like, okay, maybe this is just going to be a pullback. We're going to have more buyers step in and go up. But then by the time this happened, it'll push down again. It's just very clear that it's just not acting in a way that can be traded easily.
Right.
So I should have just said, okay, I'm going to draw, something like this from where it broke down to, where it broke up from, and just walk away and just be done. Because really, like, we're halfway between yesterday's, or what I could have done is just set an alert down here at yesterday's close, set an alert, up here at this pivot, and just walked away and said, okay, I'm not going to trade till it hits one of those key levels, and then I just wouldn't have traded. But then I got tricked because, well, I shouldn't have traded at all because it's violating my rules. But we see this crossover. I know the more times a level is tested, the less likely it is to hold. So I don't know. I just kind of thought that this level, it seemed like it was drifting up, and then I was like, I think I bought the high of one of these bars, but I don't know. It wasn't the right thing to do to trade in this because it's just right back in this choppy area. Even though EMAs have crossed, it's not in a good zone. By this time, I knew that it's not one of the 50 out of 252 days worth trading, so I should have just walked away. Should have just made my money here and left.
Yeah. Then you can also, you already have the daily context of it being an inside bar. Once you
It's okay. I don't think anyone's watching. I got 2 likes though, man.
Hey, getting up there.
Be famous. I was getting some weird like reverb from the conversation, and I thought muting it would help, but maybe it's my...
Good shot, dude.
I don't think it's you. I think it's me. Wait, it's better now. I think we're all good. It's not bad at all. My laptop's actually gonna die kind of soon. I don't have a charger. I've still got probably 15 or 20 more minutes, but
That's perfect. That's all we need.
yeah, we're all good.
So I'll show a little price action reading and what to properly expect, or at least be in the ball game of it. Like after we put in this inside bar, right? Now you can kind of safely assume we might get a breakout to the upside or downside depending on where we gap. If we gap near the lows, we can have that move down. Or let's say maybe we gap up a little bit or just open where we are or to the upside. You still have quite a bit of range to trade. Just can send it higher, right?
Yeah. Hopefully, like the easiest trade would be gapping near the upside.
Right. It's like this is like a pullback to the EMAs, trend continuation. That'd be ideal.
Well,
And going back a little bit, so look at this. And we have this big red bar. Can we expect a second? Sure. Maybe like a 15% chance of that happening. But ultimately, we get that inside bar. Same kind of thing, right? We're opening near the lows. So if we're going to trade near the high, it's already going to put in like at least 70% of its ATR.
Yeah.
So once we get near the top, is that really a good idea to start buying up here? No matter if your 5-minute plan says to buy, right? But the same thing happens. It wicks out, trades in the range. The next day, same kind of deal. I'm not sure how this day played out, but I could have got a short down here. We're going to try to break down below.
Yeah.
Let's go to that hourly on there. Or on this day, try to push down. Ultimately, we pick back up. Even if we try to break higher, we'll have to put in some move, and then a move even higher to really make a sizable move for you to make money on.
Yeah.
With the probability being there. Then days gone by, we get that gap up. It opens closer to the highs than it does the lows. Let me go back to the daily. Oh, okay. We got like a couple of inside bars, consolidating, gap up. We're closer to the high, so taking the path of least resistance. You can put in like half the ATR, then put in the other half on the breakout.
Yeah.
And you would be safe buying this breakout because you still have a lot more move left to go.
Yeah.
And then elections happen.
Yeah. Yeah, that was a crazy week, and I was like sitting out that week because I blew up on that Thursday, which that wouldn't happen according to my current plan. I don't think. Just with the new 5-minute EMA rule, but
right.
Yeah, no, I appreciate this bar by bar analysis because it is like just the way you think in probabilities. Like that's
Like,
something I need to do.
I don't want to like be that guy, but there is a right and wrong way to read the chart, right?
Yeah.
Like after your blow up day on Thursday, which is like this day, right? It's a big downtrend day.
Yeah.
It's looking at the previous context, already consulting in this range. If we get a gap to the downside, could we trend lower? Probably. That's kind of what happens. Or the opposite could have happened. We gap up to here, and then we break out.
Yeah.
Kind of like what happened here. And we still have all that move left to go.
Yeah, those are the best days. Like those are the 1 out of 5, 1 out of 10 days that you want to focus on.
Right.
The days where it's consolidating on the inside, or it's consolidated a bit, maybe for 1, 2, 3 days, and then we get a gap near the high or low.
Right.
And
you
just play that way.
You want to trade the path of least resistance, if I can make sense of that. Like, let's say we get that one big downtrend day, consolidate for 2 days, looks pretty bearish. One can maybe safely assume, like, hey, if we open where we closed or gap down a little bit and we crack these lows, we can put in another, full ATR move and still have a lot more meat left on the bone to gain. Whereas if we try to buy where it gaps here, goes up here, you try to buy up here, like you're kind of chasing, expecting price to go higher where it already made its move.
Yeah.
So that's what happens. Price gaps down a little bit. It finds the path of least resistance, which is the low, and gives you that trend day.
Yeah, and that's why that's why I have that rule of if it's an inside day, I won't trade unless it's at a key level, because that keeps me from avoiding those traps inside where it's ranging, and like it's basically just treat it as no man's land. Because whether like that one guy commented earlier, you don't know if it's a range till after, and that's kind of, I get his point. He's saying like if like today when I was buying it for the breakout, it could have gone up, and then after, in hindsight, like it just would have been a trend. It wouldn't have been a range. It sounds kind of stupid to say out loud, but like what I'm not doing a good job at articulating it. But like I don't know what's going to happen next. I don't have a crystal ball. If I did, I'd have bought Apple in 2010 or Nvidia in 2022, and I can't know what's going to happen, and that's why I have my process and my rules, and the rule of treating it as no man's land is there for a reason. Hold on. Sending my
Right.
I wrote something down today. I'll send it to you on Discord. I wrote this down and I put it up right next to here. I put it right next to my computer. So don't trade inside the prior day range. Don't trade intraday chop. And that second bullet, that kind of goes with the first one, because it's going to be a lot easier to, like, there's going to be, if I'm trading inside the prior day range, the chances are that it's going to be intraday chop is a lot higher. So
Right.
just avoiding there. Then my rule from that I made last week about no shorts and longs only, if the EMA rule, and then just the classic, I need a signal bar and confirmation break, and just so really that's like 3 bullet points. three big things. Anyway, I see you have some illustrations going.
I was on my phone. Just trying to read. Wait, can you bring up the list again?
Oh, yeah. Right here.
Inside the pierce range, set a key level, introduction. Yeah. I mean, to me, it's good enough to the way I'm understanding it.
Yeah, because this is how I have my levels. Like the prior day high and prior day low are the exact same, just a solid bar, like gray line. And then the prior day close is just a dotted line. So coming off the open, this trade was allowed because it's at this level, right? Like it doesn't have to be perfectly here. Like here's okay. It's within, a handful of points. And I know like we have our biggest moves off the open. So if we had opened up here or we had opened up like down here, it would be a little different. Like maybe I would set alerts at this level and then this level and walk away. But it basically opened at the level. And it just made sense to take a long. And I should have just made my money and walked away. I just shouldn't have traded this. But like by the time we get here, this is like halfway between prior day close, prior day high. It's already made a big move. That was already bigger than I expected. Right. And I mean I messaged you. I messaged in 2 group chats about what like just being done. Like at like 11 a.m. I said I think I was done because I caught a short on the MNQ. Like this was still like long, but the MNQ had switched. The 9 had gone below, and I caught this move down, and just made like 2R win. And I think down here I said, okay, I'm done. But then I came back to this, I think, and stupid. I just shouldn't have traded it, but that's why I started this. That's why I started this live stream. That's gonna have to end soon because I got. I'm glad you saw it too. I've got 12% left. Stop sharing my screen.
Those last 12%.
Yeah.
Let's understand a little like candlesticks and what's happening intraday, right? So that's the daily. This will be the 5-minute. On the daily, we can put in a big trend move, right? That's going to be that green bar. Then, assuming that next is going to be an inside bar, we'll get that move down the next day. So could it be reasonable to take shorts up here for the move down? Sure, maybe I wouldn't take that, but it's not out of this world, right?
Wouldn't it depend on the context of like the daily?
Oh, for sure.
Yeah. Oh, so these are daily bars. Okay. Yeah. Because if it's in like I guess it would just depend.
But this is just like looking at, just bar by bar, what you can expect, and combine that with daily context of uptrend, downtrend, or on the EMAs. But like doing what you basically did today, right? We have the inside bar. We got that move down already. But then you can see on the daily, like, hey, we already put in a wide bar. The pullback's already been complete. Do you want to take a short down here, short the bottom? Probably not.
No.
Whereas if you get like something like this, just dry out real quick. All right, we already got the inside bar after the green day. And get a fresh move to the upside. Oh, I'm terrible at drawing shit.
You're good, dude.
So you can get something like that, right? Then you can see on the intraday context, like, hey, that's the first day. All right, second day, chop a little bit more. We're staying near the highs though. Next day though, we gap up, opening near the highs, taking the path of least resistance.
Yeah.
That could be a much easier trade to take.
So when you say path of least resistance, it just means like whether it's closer to the high or to the low of the prior day?
Yeah.
Okay.
From its opening price as well. Like if you open near the low and you have to travel all the way up looking for the breakout, you're not taking the path of least resistance, right? But if it open near the low, then it breaks the low, it can probably continue downwards. And that would be an easier trade because there's a lot more ATR for it to move.
Yeah, that makes sense. So it's good to think of it in like just percentage of like how much it's already moved.
Yeah, for sure.
Yeah.
That's why like when looking at today, path of least resistance would be, maybe smaller gap up. Doesn't really have to gap up because I would put in that inside bar. You can break higher. Or, if you gap down a little bit, start pushing into the lows. Like really when it comes from a tight inside bar, you can't take either way. That's why we love these inside bars. They combine with the daily context, and the better, higher probability trade would be to break back to the upside.
Yeah. Yeah, I think that's more likely too.
Right. Or I can pull up this one Google image real quick. Oh, no, I can't find it. It's basically what I illustrated here. Candlestick range theory. Like seeing what's happening on the daily and intraday can help you make better decisions.
Yeah. Did you have a Google thing you were going to show? Can you not find it? I couldn't
find it.
Dang.
I know that Thean sometimes shows it. Can't find it.
Huh.
But it's basically this.
Yeah.
Right.
Like just think of it in how much of the ATR has been moved, and then where like the opening print, like is that closer to the high or low of the prior day range?
Right. And then also like what is the trend so you can take the proper side.
Yeah, right. And my rules will help me like determine that. Like Like today the trend was up, so check the upside. The Thursday before election week when I had my my bad day, the trend was down, so only go to the short side. Yeah. I had a lot of confusion. I used to have a lot more confusion because my rule was just if it's above, the 5 minute, you're only allowed to go long. But I wasn't like that was making me confused and adding ambiguity by like changing the rule to like the 5 minute ATR or the 5 minute EMAs, 9 being
Right.
above, 9 being below. It takes away the ambiguity. It says you're only allowed to do this. You're only allowed to go long, and that helps a lot.
Oh, for sure. Like that is a great rule.
Yeah. I'm like, you've been watching, you've known me for a while now, so it's like I overanalyze and think like I can make a case for a bear or a bull, like thesis. So just having that rule, it just makes it so much easier. Like it uses so much less like mental bandwidth. And today I just shouldn't have traded because it had made most of that move. It had made most of the move, and we're in a down. It's been downtrending, so it's not like it's gonna move that much.
Right. Like it's not just gonna completely V recovery.
Yeah.
Sometimes it does happen, but let's play the probability here.
Yeah, and if it happens without me, it's like, oh well. It was. If it did break, okay, so let's say it like broke the prior day high. At that point, then you could start going for longs, right?
Yeah, not really, because
it made most of the move.
Right.
Okay.
But if we gapped up to like the upper 50%, that would be more reasonable.
Yeah. So what happens if if it today played out exactly like it did, but then it just kept going up and it broke the high and it just continued on up? Like, just be like, oh shit, that's a big day. I just missed out, but it's okay to miss out.
Oh yeah, exactly. Like just shadow luck, you gotta follow the more consistent moves.
Exactly. Yeah. That's what I was getting at. I wasn't like really. I was playing devil's advocate, but
yeah, I mean, like you can't try to capture every single move because if you do, you're gonna get into a lot of bad moves that you might make money from, but ultimately you will lose over time. But if you stick to the more consistent moves, you do become more consistent.
Yeah, just like today, just like what I did today. Dude, I keep like thinking, like, okay, I made my mistake. I'm gonna like last week, like I had a big dumb mistake, and I like incorporated that lesson really well. Like that was a really it sucked to make that tuition payment, but like I added that really important EMAs rule.
Right.
So I keep like getting in the mindset of like, all right, I'm not gonna like make these stupid mistakes anymore, but I keep making them. And I mean, I guess the solution is just like do stuff like write down the word execute 1,000 times and just like keep like just do whatever it takes to be disciplined. Because it's like it is like your behavior that kind of determines your success.
Right. You have it, you have the knowledge.
Yeah.
Just gotta do it.
Yeah. I'm gonna.
Oh, I know. It just takes time. I don't expect it overnight.
Yeah, I thought like I kind of do expect it overnight. So maybe like I'm putting too much pressure on myself. That's something someone told me recently is that I'm putting too much pressure on myself. And I think maybe because like I want to like capture those big days and be profitable so bad that like I took that stupid trade inside the range when like if I could have just stepped back and been like, today's not the day. Like the moves already happened today. I know you want it to happen today, but it's just not going to happen today. You just have to like let it go and walk away. And even if it does happen today, The probabilities say it's not. So don't do it.
Exactly. Like you can't get caught up in those missed moves that you think you might have made money, but you really wouldn't have in the long run.
Yeah.
Hey, maybe just a thought, but imagine if you only traded outside days.
Be so much better. Yeah, I mean, and that's why I have my rule, because I mean today was an inside day, but it was still a great opportunity. It's like definitely not a day I should have sat out, but after it made its move, then yeah, you should have sat out.
Right.
Like once it made that big bear bar, and it's like, okay, the Bears have shown up, the Bulls have kind of given up. At that point, it's like, okay, I probably should just be done for the day because it's probably just going to be choppy.
Right. Then also, going back to reading price action, that one red bar engulfed like many bars worth of action.
Oh yeah, like an hour's worth. It looks like 45 minutes worth.
Right.
Pretty much an hour. Yeah. Yeah, because look at the hourly candle. It had like a huge wick to the upside. Maybe not on the QQQ. On SPY, it had a huge wick to the upside.
Or it's the same kind of thing too. You see on the 5 minute. That one bar wipes out like 5 bars.
Yeah. But yeah, big wick.
Yep. So the little price action tells.
How would you draw that range? Would you draw it from the top of that bar down? Like, how would you draw that intraday range?
I would like to see where this bottoms first. So without knowing, because I did draw this in hindsight, right?
Yeah.
I would do this.
Okay.
But hey, we're breaking down. That could make sense because the hourly pulled back. We might make it move lower. Could have trended down all the way. Sure.
Yeah, I mean that was a good short. Like at the end of that box, that like little pause, that actually is like a good short right there. And you could just, because for me, I like to go for like pretty close targets, so I would just target like that swing low, and I think that would have hit, and that would have been like 12 ES points or 10 ES points. That would have been a decent short. But then once it starts coming back up, it's like, okay, then you really have to be done for the day because it's going right back into the equilibrium zone.
Right, like going back into the range, reclaiming.
Yeah, that's where I was entering. I just shouldn't have. Obviously.
Like if we break to the upside, look for longs. If we break down below this range, look for shorts.
Yeah.
It's really simple stuff, but I guess it's kind of hard too.
Well, that line you just drew at the bottom, that one should be at lower, or that one should be higher, I think. Like, because we already would have broken to the low side. But yeah, I should have just.
There's multiple lines you can draw, but ultimately, like, this is now the new range low once we made it back up to the range highs. This range.
Yeah.
So it's like, it's the art of trading.
Yeah.
I know you got it.
I got it.
Sixth time.
Yeah. I mean, I'm about to hit 3 years in January. So.
Yeah. I mean, yeah, it usually takes that amount of time.
Yeah, no, I know. I mean, I know the average retail takes 3 to 5 years. That's what I hear. I think that's like what Adam Grimes says. It takes 3 to 5 years for the average retail. I know it took Al Brooks like 10 years or something. Granted, he didn't have the internet, so it should.
Right.
It was much harder back then to learn, but I mean, if it takes me. Even if it took me another 6 months, which I hope it doesn't take that long, but like in the grand scheme,
gotta be okay with it.
in the grand scheme of life, like I'll look back like 10 years from now and be like, yeah, it took me 3.5 years, but then like it won't be that big of a deal.
Yeah, because like once you begin to get it, like it does become more exponential. Your account will grow a lot faster because you are doing the right things.
Yeah.
You know, like you'll make it very quickly, you know.
Yeah. Especially me, because I'm very comfortable with putting on risk. I'm too comfortable, probably. Like, I need to be more picky with just the entries, but
Oh, sure. Don't be so eager to enter every trade. You can be patient, wait for better opportunities.
yeah. Well, that's why the next exercise, instead of writing execute, I'm going to write picky or friction or something like that.
There you go.
Yeah, I'll have to if I make another bad mistake. Sweet. Yeah, I just came on here expecting to like. I didn't expect you to join. I just expected to just like just be writing, and maybe someone would pop in and ask a question. But this just turned into a great lesson.
Oh, sure. I mean, my dinner time. So.
Your dinner time, yeah. So I can leave this public if you want, or I can make it unlisted, whatever you want.
Up to you, man. I don't care.
Okay. Yeah, I'll just look back at it, but
oh, for sure.
I'm trying to think. I mean, we just covered a lot of stuff. Am I sharing my screen still or no? No, I'm not.
No.
Cool. Do you have 2 monitors?
I have 3.
Oh, nice. Nice.
Kind of useless, but.
Yeah, I mean it's nice. It's what I have 2 for my work, and it's kind of necessary for trading though. Like, I just have the one because it's all I need.
Right. I mean, you can have multiple charts up on one. That's all you need. Multiple time frames.
Yeah. Especially as like an intraday.
Right.
Yeah. So I'm gonna look back at this now. So I would have, once I got this big engulfing bearish bar, I would draw a rectangle and say, okay, I'm not gonna trade. Well, I have to wait for it to turn around. So once it comes down, I'd say, well, at this point, like, I think going for long is still acceptable because, like, it's just a pullback, but it really shouldn't be because we're inside the prior day range. It's made most of its move. It's just not at a good location. Right. So I should just
wait for a better setup.
Yeah. And at this
point, more picky.
Yeah. And at this point, I probably would have walked away and come back and seen this and said, okay, it just is not a good day for trading. It looks pretty bearish. But then we push way down. We break out of the range. Say, okay, maybe this is going to end up being a bearish day. And we push back up. And then we get this bar. And say, okay, we've shown some bearish momentum. I can enter short here. Bearish bar, and I would target like right here. And so that would be like 7 points. Easy win. But then we start coming back up. And I say, okay, the market is just going to be at equilibrium for the rest of the day. It'll probably close right around here. I walk away. And then, yeah, of course, it just closes right around here. Of course, when I was trading, though, I was like, oh, look at the EMAs are crossing. It's going to go long. But I have to get out of that impulsive mindset and just go back to my plan. Say, okay, just look at the daily bar. Like, look back at the higher time frame. Say it's probably not gonna like go up here. And If
Right.
it does, so what? Like, just don't. It's better to like preserve the mental capital and wait for a better day, because now we have inside day. So like this is ready for a breakout depending on where it opens. And maybe, oftentimes you get 2 inside days in a row. So maybe
Right.
it'll be
Very
another
nice. inside
inside day. But if it is, I'm going to follow my rule of not trading unless it's at a key level. Like if
Exactly.
if it doesn't move at all and it opens here, maybe I'll trade based on the 5 minutes up to a key level. But like if it opens here or it opens here, like not near a key level, I won't trade at all. If it opens here, I'll like watch for a long move up. Like I'll watch for it to come up and break, and I'll look for signal bars to buy high and maybe close this gap. And if we open down here, or if we open here, I'll just watch. Maybe we'll come up to close and push down. Maybe we'll push down. I don't know. I have to just take it as it comes, but I don't know.
Right.
I mean, if it's here, if it opens smack dab in the middle, then it uses up most of its like ATR just getting to the edge. So the likelihood, if it opens like right in the middle, it's probably not going to be a good day. But if it opens near the tie or the low, it's much likelier that it'll be a better day.
Yep.
And maybe if it opens near the low, like we are still in a daily, we're in an uptrend on the daily. So if it does, I'm going to the hourly now. If it does open down here, like maybe it'll do a breakout and maybe it'll be a failed breakout and like it will actually be a good long, like a double bottom type thing. And look to fill the gap. Because that's like from this level to this level. That's, I guess I'll just have to follow my 5-minute EMA rule here. Because if it opens here, like I'll try to play for the short breakdown. But because the daily is in a bull trend still, I'm like more comfortable. I guess I'm more comfortable going for a long for a gap close than I am playing a breakout. But I'm like most comfortable probably playing a breakout to the upside if it opens up here.
Yeah, it's just understanding where you're at within the range. Are we coming from a wide range bar, narrow range bar, inside day, daily context, trend, combining all those things together, having confluence.
Yeah.
You gotta make a well planned out trade, not just taking any trade because, oh hey, the 9 is above the 20, let me buy this pullback.
Yeah. Then that gets you to enter like right here. That's
are you supposed to be showing your screen?
Oh, yeah, I'm supposed to be sharing my screen. Not bad. It's my first time streaming, so still got. I don't have the practice. I've been like, that's funny.
I was kind of following along.
Damn. Dang, I was. Okay. Basically, I said like down here, I'd be more comfortable. I'm most comfortable taking a long if it like opens near here. If it opens near the bottom, like I'm less comfortable playing the breakout short from right here than I am playing it long from up here, just because we are in a bullish trend on the daily. So it's like I could see it double bottom. Like if it opens down here, breaks out, but then it could fail. Like I could see it if it opens down here, I could see like a gap close move because 50% of gaps close within 24 hours, and the market's efficient. It closes gaps. I think like 70% of gaps close within 72 hours. So just having it open down here, I know there's like a 50-50 shot that it will come all the way up here and close this gap.
Right.
Especially we're in so
It's like the pre-election day where you already have like the inside bar, but in the context, like we are at a rising 50 moving average, so we are in that longer term pullback. You get that double bottom, get a hammer candle.
yeah.
The next day, we open near the high, have the least resistance plus daily context from a bounce. That's your high probability long. Like this context too, like you can go for that double bottom. But ultimately, like I would love to wait for that candle to close, then play the bounce and break out the next day.
Wait, am I supposed to be
But
looking
that
at your
little-
screen now? Are you sharing yours?
I think so.
All right, I'm coming back. All right, sorry. I only have I've just got one screen on my laptop. Shit, I only have 1%, so I think I have to end this stream right now.
All right, you got that.
Hold on. I'll just keep talking with you until my laptop dies, but I'm gonna end my stream right now.